everyone, and welcome to another deep dive into all things economic news.
Let's do it.
All right, so we got a lot to cover today.
Yeah.
We try to pick kind of a mixture of things that are happening both domestically and in the global markets, and
A little spice at the end.
and a little spice at the end. Exactly. We try to keep things interesting.
Yeah.
So, you want to kick us off with?
Let's kick it off with inflation.
Okay.
The FAD's gauge of choice, that core PCE, accelerated in October to 2.8%.
Okay, so 2.8% year on year.
Right, year on year.
Okay, and so I always kind of think, what does this actually mean for, us? Are we supposed to be running to the grocery store and buying up all the, ramen noodles we can?
Hopefully not.
Hopefully not.
Hopefully not.
Okay, good.
But it does mean that prices of a basket of goods are rising a little bit faster than they had been. This kind of plays into how the Federal Reserve thinks about interest rates and whether or not they're going to cut them anytime soon.
Yeah, it's all a balancing act, right?
Exactly.
So higher inflation means...
they're not going to cut them.
Yeah, they're not going to cut them.
They're a little...
Because that can lead to more inflation.
Right. They want to keep things relatively stable.
Okay, all right. Well, let's shift gears a little bit and talk about the U.S. stock market. What happened there?
So we saw a dip today, especially in tech.
Okay.
Dell and HP, they're down 12% and 11.4% respectively.
Wow.
Slumping PC sales to blame there.
Okay.
And CrowdStrike, the cybersecurity company, fell 4.6% after they predicted weaker earnings.
Okay, so a lot of people, when they see big tech names like that starting to go down, they get a little worried that, is this,
the beginning of the end?
Yeah, the beginning of the end. Are we, heading for a major correction?
Right.
Is this just a blip? What's happening here?
Yeah. Well, the interesting thing is, while certain big tech names are hurting, the overall market isn't necessarily tanking.
Okay.
So the Dow Jones and the S&P 500 saw slight dips, but the Russell 2000, which tracks smaller companies, actually went up a little.
Oh, interesting. Okay.
So you've got different stories.
Yeah, different stories
happening within the market.
Yeah, it's like a microcosm of the whole economy, right? There's always different things going on.
Totally.
All right. Well, speaking of kind of a broader picture, let's zoom out even further and see what's happening in the global markets.
Yeah, it's happening around the world.
So what's going on?
So Asian markets, kind of mixed bag there.
Okay.
Japan is up 0.9%.
Yeah.
China is down 0.8%.
Okay.
And the pan-European stocks, 600, which represents a broad range of European companies, saw a small decline of 0.19%.
It's so fascinating to me how, you have all of these different markets that are connected.
Their own thing.
Yeah, but they're their own thing, and they're influenced by, very unique...
Yeah, local conditions.
Yeah, local conditions, exactly.
By politics.
Yeah, and then, of course, the big global trends.
Yeah, absolutely.
So, yeah, it's just a constant reminder, I think, that staying informed about what's happening, not just here, but all over, can really help us understand our own
backyard.
Yeah, our own backyard, exactly.
For sure.
All right, well, I know there's been some, kind of big predictions being made about the U.S. economy.
Yeah.
Anyone in particular that we should be paying attention to?
Well, J.P. Morgan Chase.
Okay.
They just came out and said they think the S&P 500 is going to hit 6,500.
Wow.
By the end of 2025.
Okay, that's a pretty big...
That's a big jump.
Yeah.
So that's a pretty big vote of confidence in the U.S. economy.
Yeah. What's fueling that optimism, I guess?
Well, the U.S. economy did grow by 2.8% in the third quarter.
Okay.
Driven by consumer spending.
Okay.
And business investment.
So all that holiday shopping that we're all doing is actually helping the economy.
It's doing its part.
Okay, good.
But yeah, obviously they're keeping a close eye on inflation.
Right.
And how that might affect the Fed's decisions on interest rates.
Right. Yeah, it's kind of like this weird balancing act.
Total balancing act.
Where you want the economy to grow, but you don't want it to grow too fast.
Right. You don't want it to overheat.
Yeah.
You got to keep it
a little bit. The Goldilocks scenario.
Yeah, the Goldilocks scenario, exactly. All right, well, I heard there was also some good news on the trade front.
Yeah, the U.S. trade deficit for October came in better than expected.
Oh, okay.
So it was lower than economists predicted.
Okay.
Suggesting that the U.S. might be exporting more goods and services.
Okay.
And, obviously good for economic growth. Right.
Although, it's just one data point in a very complex picture.
Yeah, you can't get too excited or too bummed out about one thing.
It's just one piece of the puzzle.
One piece of the puzzle, exactly. All right, well, let's dive into some specific companies now that are making headlines, starting with Microsoft.
Okay.
I heard they're facing a pretty serious antitrust investigation.
They are, yes, by the FTC.
The FTC, okay.
Yeah, and it's pretty wide-ranging.
Oh, okay.
They're looking into everything from cloud computing and AI to cybersecurity and software licensing.
Oh, wow.
Yeah.
So that's a pretty big deal, potentially.
It's a big deal, yeah. And, this could have implications not only for Microsoft,
right,
but for the entire tech industry.
Right, yeah, because they're kind of a bellwether in a way.
Totally.
So everyone's going to be watching that really closely.
For sure.
All right, what about BlackRock? I know they're on a bit of a spending spree, it seems like.
Yeah, they are.
And also facing some legal troubles.
Yeah, kind of a mixed bag there.
Yeah.
So they're reportedly in talks to acquire HPS Investment Partners.
Okay.
It's a private credit group for $12 billion.
Wow, $12 billion.
A lot of money.
Yeah.
But at the same time, they're also facing a lawsuit.
Okay.
Along with Vanguard and State Street alleging antitrust violations.
Interesting.
In the world of ESG investing.
Okay, so for those of us who are not, super familiar with that world, can you give us a quick breakdown of what ESG investing is and why it's so controversial?
Yeah, so ESG stands for Environmental, Social, and Governance.
Okay.
And it's basically a way of investing that considers a company's impact on these factors, not just their financial performance.
So it's kind of like investing with your values.
Exactly.
You pick companies that are
aligning your money with your values.
Exactly, yeah.
Yeah.
Okay.
But the lawsuit is alleging that these firms are colluding to promote ESG investing in a way that stifles competition and potentially increases costs for investors.
So it's a bit of a debate.
It's a big debate.
Yeah, it's a complex issue.
It is very complex.
With, strong arguments.
On both sides?
On both sides, yeah.
Yeah.
Okay, well, I think we've earned a little fun now.
I think so.
After all of that kind of heavy.
Yeah, we've earned some levity.
Yeah, we've earned some levity.
Some good news.
So tell me about this giant chicken hotel.
Yes, so a 10-story building shaped like a rooster.
I love it.
Just hatched in the Philippines.
Of course.
And it is officially the largest chicken-shaped building in the world.
This is amazing.
According to Guinness World Records.
I mean, you can't make this stuff up.
You can't make it up.
It's just too good.
It's fantastic.
All right, so 10-story chicken hotel in the Philippines.
Yes.
If you're looking for a unique travel destination...
There you go.
There you go. Book your tickets now.
I wonder if the rooms are shaped like eggs.
Oh, that's a good question.
I don't know.
We'll have to look into that.
We'll have to look into that.
All right. Well, it's just a reminder that even in a world of serious economic news, there's always room for a little whimsy.
Absolutely.
And a little fun.
Totally.
And, just a reminder that consumer spending can take many forms.
So many forms.
From, buying groceries to staying in a giant chicken hotel.
To the once-in-a-lifetime.
To the once-in-a-lifetime experiences, exactly. All right, well, I think we need to circle back, though, to consumer spending and how it plays into this bigger picture. But I think we're going to save that for part 2 of our deep dive. So stay tuned.
Definitely stay tuned.
We'll be right back after a short break.
That chicken hotel.
Yeah.
Yeah, it really just goes to show you that consumer spending...
It can take many forms.
It really can.
Yeah.
But speaking of consumer spending, we were talking about how it's been a major driver of economic growth, but how sustainable is it in the long run?
Yeah, that's the million-dollar question, right?
Yes.
Like, people are still spending, but, for how long?
Right, and especially with these rising interest rates.
Exactly.
Yeah.
Are people going to start tightening their belts?
Right. Will they?
I
mean, consumer confidence can be pretty fickle.
It can be.
And if people start feeling uncertain about the future, they might be less inclined to, spend money.
Yeah, no one wants to splurge on a, vacation to a giant chicken.
Right, exactly.
If they're worried about losing their job.
If they're worried about making rent.
Exactly, yeah.
But on the other hand, the job market remains strong.
That's true.
And wages are slowly increasing.
So it's kind of like this.
So it's a push and pull.
It is a push and pull.
Yeah.
You've got these competing forces.
Yeah.
And it's creating a lot of uncertainty for businesses and investors and policymakers.
Yeah.
No one really knows what's going to happen.
Yeah. It's like trying to predict the weather.
It really is.
Sometimes you get it right. Sometimes you
just never know. Yeah, you never know. All right. Well, speaking of companies that are kind of navigating this weird landscape,
right?
What about EasyJet? I heard they're doing pretty well.
They are, yeah. So they actually just reported a 34% jump in profits.
Wow. Okay.
And they're attributing it to, strong travel demand.
Okay.
And smart cost management.
Okay.
And they even announced they're going to double their annual dividend.
Wow. So that's good news for investors.
That's great news for investors.
Yeah.
Yeah, so things are looking up for them.
Okay, but I'm sure there's a but coming.
There is a but.
Okay.
Their stock actually dipped slightly.
Oh, interesting.
Yeah, so it seems like investors might be a little hesitant.
Okay.
Maybe anticipating, future challenges in the airline industry.
Right, fuel costs and all that stuff.
Exactly.
Yeah, it's never a straight line.
It's never a straight line.
All right, what about Just Eat Takeaway? I heard they made a pretty interesting move.
They did, yeah. So they announced plans to delist their shares from the London Stock Exchange.
Oh, wow. Okay.
Yeah. They cited low trading volume.
Okay.
For their London-listed shares as the reason.
So, that seems counterintuitive, right, to pull out of, like, a major financial hub?
You would think so.
Yeah.
But they're going to continue to be listed on the Amsterdam Stock Exchange.
Okay.
Which they consider, their primary trading venue.
Okay.
So it seems like they're focusing on streamlining their operations.
Right.
And concentrating their investor base.
So kind of a strategic retreat.
Yeah, exactly.
Okay. Well, let's shift gears a little bit and talk about some geopolitical news.
Okay.
What's happening in the world?
So some developments in the Middle East.
Okay.
It seems like that U.S. brokered ceasefire between Israel and Hezbollah is holding strong on its first day.
Good.
Fingers crossed.
Fingers crossed. Yeah, it's a very delicate situation.
It is.
But any progress towards de-escalation is, a good sign. Absolutely. Yeah. And, these types of conflicts can have such far-reaching consequences.
They do.
Not only in terms of like human suffering,
of course,
but also for the global economy.
Absolutely. It can disrupt supply chains.
Yeah.
It can affect energy prices.
Yeah. So it's something that we're going to be watching very closely.
Definitely.
All right. Well, back here in the U.S.,
yes,
I heard the Biden administration is considering some more restrictions on the sale of certain technologies to China.
They are.
Okay, so we've heard this before.
Right.
Like, what are we talking about here and why?
So this time, the focus is on semiconductor equipment.
Okay.
And AI memory chips.
Okay.
And it's seen as an escalation of the U.S. effort to, curb China's technological advancements, especially in areas with, potential military applications.
So it's a tough balancing act, right?
It is.
Because you want to promote innovation.
You do.
But you also want to protect national security, so it's a tough...
Finding that balance.
Yeah, finding that balance, exactly.
Yeah.
All right, well, I think we've covered a lot of ground.
We have.
In this deep dive.
We've gone all over the world.
We have, from inflation to,
giant chickens.
Giant chickens, exactly. But I think before we wrap up, I want to kind of circle back to that question that we posed earlier.
Right.
About the interplay of... inflation, interest rates, and consumer spending.
Right, because it's really the central.
Yeah, like how do you see this playing out?
It is.
In the coming months and years.
Right, so if inflation continues, on this upward trajectory.
Right.
The Fed is likely going to feel pressure to raise interest rates even further.
Which could then slow down the economy even more.
Exactly. It's a tough spot.
Yeah.
And it creates a lot of uncertainty for, everybody involved.
Yeah. It's like trying to solve a really complicated math problem.
Yeah.
With, numbers that are constantly changing.
You don't know all the variables.
But you don't know all the variables exactly.
Yeah. So I guess the takeaway here is that...
The takeaway is that uncertainty is the only certainty.
Oh, that's good.
But in all seriousness, we're living in a really complex, interconnected world. Yeah. And what happens in one part of the world can have ripple effects, across the globe.
Yeah, it's a good reminder that we can't be insular.
We can't.
In our thinking. Right? We have to think about.
Got to think globally.
Yeah, think globally, exactly. All right, so stay informed, stay curious.
Stay nimble.
Stay nimble.
Yeah.
And be prepared for anything.
Exactly.
All right, well, we're going to take another short break, but we'll be right back with the final part of our deep dive, so stay tuned.
And we are back for the final stretch of our economic deep dive.
The home stretch.
All right, so we've talked about everything from inflation and, tech stocks to a giant chicken hotel.
Yeah, it's been a ride.
It has been a ride.
But, even with all that we've covered,
right.
there are still some, key questions that we need to unpack. Remember that question I posed earlier about, the interplay of inflation, interest rates, consumer spending?
Yeah, it's a big one.
Yeah. How do we see this playing out?
Yeah, like give me your crystal ball predictions.
Well, if I had a crystal ball,
right.
I think if inflation continues to, go up,
right.
the Fed's going to feel pressure to raise rates even further.
Which could then slow down the economy.
Which could then, put the brakes on things a bit.
But at the same time, people are still spending.
Yeah, so it's this real push and pull.
It is, yeah.
And it's creating a lot of uncertainty for everyone.
Yeah, it's hard to plan.
It's hard to plan when you don't know what's coming.
All right, well, I think one of the biggest takeaways from this whole deep dive is that, the global economy is a very complex, interconnected system.
Yeah, and what happens in one corner of the world can really affect everyone else.
Yeah, it's a good reminder that we can't be, just thinking about ourselves.
Right. Got to think globally.
Think globally. Be aware of what's happening. Exactly. And I think the other big takeaway is that, we have to embrace uncertainty.
I think so too, yeah.
Like, there's no way to predict the future.
If we could predict the future, we'd all be rich.
We'd all be billionaires.
Exactly.
So, the best we can do is stay informed.
Stay informed.
Ask questions.
And be ready to adapt.
Yeah, be nimble.
Be nimble.
And, roll with the punches.
That's right.
All right, well, that's about all the time we have for today.
Well, that went by fast.
It did, yeah.
It always does.
But we covered a lot of ground.
I feel like we did a good deep dive.
I think so, too.
Yeah.
So thanks to everyone for listening.
Yes, thank you for joining us.
And remember, in a world that's constantly changing, the most valuable asset you have is your ability to learn and adapt.
Couldn't agree more.
So stay curious.
Stay curious.
And we'll see you next time.
See you next time.